Stavros Tousios for M4Markets, and today I'm going to have a quick look at the prices of gold and also the S&P 500, the E-mini futures to be precise. So gold has been moving higher for a while now. We have been chasing it to the upside, to be fair, and we are seeing some sort of convergence here, which adds a bit of bias to the upside when we're looking at the daily, because we haven't really managed to see a decent correction or a pullback at least, and we are above the 61.8, which is the golden ratio. We've also come and overlap with this move to the downside, the first initial leg to the downside. So to me, this suggests it looks like that this has a little bit more upside to do. Perhaps, who knows, we're gonna go closer to the 2K. Now on the 4-hour, we do have a very evident divergence signal on the RSI, on momentum, okay? And the way we do see this, for now at least, is that if we assume we start falling from here, one of the first levels to pay attention to is going to be around the 1860. The other thing that we have to also pay attention is that we have a channel here in the middle of nowhere, and we are trading above that channel. Okay, so before we even get to 23.6, obviously, because this is going to be considered a pullback, we do have a signal to deal with over here. We do see that coming in, and potentially, we look for a break in this channel. If we break back within this channel, then we open the door to this median line and also the low of this base channel. And of course, that is very close to 1855, the 23.6. Only if we break like below the 18K, 1786, I would say, we are going to consider this as a potential reversal. Until then, okay, that seems to be wanting to do higher levels, because it's not very typical that will break the golden pocket, which is, I repeat, at around the 1900s, okay, with the first attempt. Now on the S&P, and if we look at the daily as well here, it looks like if we get another leg to the upside over here, we could potentially see a signal on the RSI popping as well. Okay, now here's what is more important on the S&P. This is what we're facing right now, a stiff resistance. Okay, and on the shorter term over here as well, we have actually come and done the 61.8 as well. So guys, the idea is that we are likely to see a rejection here initially. And if we manage to stay above the 3900s, then it would probably end up having a second attempt, and second attempts usually lead to breakouts. If we break above, then we're looking for the 4180 and perhaps even higher. But if we lose that low over here, the 3900s, there is high chances we're going to lose the 3780 as well. And from there, I'm going to be looking for the 50%. The 50 is higher. Well, we're going to be looking at the 61.8, which is around the 3757. If that holds, there might be some sort of potential for upside. But if we lose that one as well, then most probably that is that swing high is the high in. Okay, so these levels are very important, and we are actually at a very critical level here on the S&P. Okay, gold is a little bit more biased to the upside. It doesn't have any major supports or resistances to go near, and it's just above the 61.8 as well. But these, with the channel combined, it's a very big level, very critical for the medium term for the S&P 500. Now, as you can see, we have a slight divergence here as well. Probably will be more evident on the 1 hour, which suggests that we might indeed be due a correction, at least, if not a pullback, and we're going to be looking for the 4K and just below the 4K for a potential rejection. If we lose it, then probably we're going to continue lower down. But this has already been rejected over here, so pay attention to your longs.